Hello, everyone, and welcome back to the channel. This is Fair Value Finder, and today we're taking a break from earnings and looking into a requested stock. And this stock is Hormel Foods Corporation, ticker HRL. This one is very interesting, and I'm glad that we're digging into it because it's come across my radar in the past. I've considered it, but I haven't dug too deep. And looking at some of the brands, I didn't even know that they owned some of these brands. So they own Black Label Bacon, Columbus Charcuterie, Hormel Chili, Hormel Pepperoni, Applegate Breaded Chicken, Herdez Products, Hormel Square Table Entrees, Cafe H Sliced Meats, Austin Blue Sliced Meats, and Mary Kitchen Hatch. So this surprised me. I didn't know that they owned the Herdez products, and I like those products. So that makes me a bit more interested in the company here. But this is what we have for the charts. We're looking at the last few years. 2019 is as far as we typically go back to as time goes on. We might be looking a little bit further back at some of these companies, but I have graphed what the numbers have come out to, as well as some support and resistance lines. Like there seems to be quite a bit of support around this $37 level with a lot of touch points uh, across the stock. It was resistance at some point. There's been a lot of movement at this point. It's touched down on it 3 times recently, but not really dropped below for an extended period of time. And that just so happens to be exactly where the undervalued number lies for this stock. We're looking at 3707, and that's right about where the support is, which is interesting. The fair value we're looking at is around 43 and a half, and then we'd consider it to be overvalued above 48. So the highest that it's reached is 53.44. And another interesting thing is there's a lot of price action and resistance up in this $48 range as well. So this is definitely looking like a value stock and is very interesting to us. So right now, it's not undervalued. It is under the fair value by a tad, almost 10% below. And they pay out a somewhat decent dividend, just shy of 3% at the moment. So that is something to consider about the stock. If it were underneath the $37 level, I would definitely want to buy into it. Where it sits right now, you've missed out on some of the gains already, but it does seem to trade within this range for the most part. So that is something to keep an eye on. And this range does move over time. But looking into the numbers, this is our first time taking a look at the stock. So we can go through the orange and look at the trends. So revenue, we're wanting to see some nice double-digit growth in revenue, or definitely outpacing inflation. So we're seeing revenue growing at 9.5% year over year, and that has picked up more recently. They do have analyst projections of pretty slow growth going forward. This year or last year, they came in at 12.45, and this year they're expected to come in at 12.5. Next year, 12.85. So that's not massive growth year over year. We did see some slow growth from 2019 to 2020 and a huge jump in 2021. And at least they're able to continue that with another huge jump in 2022 and growth going forward. So that's okay. Expenses as a portion of revenue, we want to see this on the decline, and it's kind of stagnant around that 88, 89 dollar or 88, 89% range. They had jumped up to 90.6 in 2021, but for the most part, they've kind of just stayed in those high 80s. Mm, that's kind of high, and looks like they're not focused too much on lowering their expenses. Those are growing at 10.24% year over year. And again, growing faster more recently. So the growth in the expenses is outpacing the growth in revenues. And we'd expect to see declining margins off of that. And that's what we see 19.8, 19, 16.9, 17.4. So they're down a whole 2% on their gross margin. and their net margin is down 2% as well. 10.3, 9.5, 8, and 8. So it looks like 8% net margins might be their new normal, which is not what we want to see. That's kind of low in the food business. That's almost how things work. We've taken a look at some of the other food companies and grocery companies, and low margins is how they operate. You don't want to rip someone off for food, a big necessity. Their earnings, not a whole lot of movement here. We see the compound annual growth rate of 0.18. It was 183 in 2019, 184 in 2022. It actually dipped down for 2020 and 2021. This year they're expected to come in at $1.74. Next year at $1.88. So next year would be a much better year. And the valuation metric down here, we'd be looking at that bringing in about 40. That would bring in about $49 worth of value for the valuation of the company. Share count is something we want to see on the decline, and it's something that they have risen. Let's see, 534 to 538 to 541 to 544, and they just continue to rise it. So uh, on this track, they'll be to almost 552 next year, and that is not something that we like to see. Shareholders' equity is at least climbing, though, so that is a good sign that it's not being diluted too badly from the additional shares. Uh, Free cash flow yield seems to be pretty stable around 7. So this looks like just a very consistent company. Number after number, we're seeing pretty good consistency and not too much surprise in any of these values, which is good. We'd probably consider it to be a dividend stock then, because they do pay out a relatively high dividend and they grow it pretty quick too. Almost 7% year over year. It's kind of slowed down more recently. It looks like they're sticking to the same dollar amount, which would, of course, be a smaller percentage every single year that goes by. Tangible book value is positive. It did dip down very low in 2021 and is back on the rise. We saw good value back in 2020, and the debt to equity ratio is on the decline. Same story there. Looks like they took out a lot of debt in 2021. Yeah, moving from $3.5 billion to 5.7. That's a very large jump in their liabilities. But at least they saw a large jump in their assets as well. So hopefully those assets will help bring in the revenue to offset those liabilities. And we see over here the numbers, 18% growth just about in assets, while 38% growth in the liabilities. ROE, we want to see something close to 20, and we're not really seeing that. We're seeing a decline year over year on this number. And that's probably due to the low revenue growth and the increasing common stock equity. Yeah, they're making very small gains in their net income, and the common stock equity is actually making pretty good moves, which means that they're bolstering that balance sheet. Yeah, 8% in the common stock equity, while you see a net profit growth of 0.72%. And that brings us down to all of this here. So we're seeing growth for sure. 35 and a half moving to 36 and three quarters, moving to 39. And so we'd be looking at a decent value around 37 right now for a place to have a decent margin of safety when you're getting into the stock. And then we'd want to reevaluate more towards the $50 range. It looks like that's what the market did previously. It hit up 53.44, and the market clearly did not feel like the stock was worth that much. Potentially news came out at that point, but it took a dive right down to the fair value, and then it tried again to break out, and then again, and it's back down towards the margin of safety range. which if you had bought back earlier this year in March, you would have gotten in and had some decent returns. Looks like almost 10% returns at that point to today. The trends, seeing them graphed, we've already gone over the numbers. Revenue is growing pretty slowly, but it is growing. Cost of goods growing as well. Kind of a small margin there, but we already touched on that. The gross profit, I don't like this down year in 2020, but they did take a lot of debt, as we saw. Mm. And got back on track in 2021. EBIT, we see a very similar pattern dropping up, and then net profit is very consistent here, which isn't necessarily something that we want to see consistency in, but at least from 2021 on into the expected future, we do see some growth there. Balance sheet, that's a great view of the assets, some nice growth. Liabilities growing as well, not as great. We'd like to see these flatter, and the tangible assets are all over the place. And that leads to a tangible book value that is all over the place. And we saw that when we got to the numbers. They are now growing that again, but something definitely shifted in 2021. Cash flows, we see some decent growth here, a small jump between 2020 and 2021, but aside from that, pretty consistent mid-sized steps, we'd say. Dividend, some nice growth, 6% year over year. Hopefully we see them in a dividend raise video and can evaluate at that point whether they're a good dividend stock to purchase. And then all of the valuations graphed. So we can see a better idea of the trends here, and everything is trending upwards. There's no huge spikes down, no huge spikes up. And this is what we really want to see in a stock, is just some good consistency. And the fact that the share price is down here, and historically, I mean, it was one of the higher ones. This is not a stock that trades at a discount. We can see from the numbers right here, typically it actually trades at a premium to its fair value. So right now is the first time in our time frame that it's trading at a discount to the fair value. And for that reason, I don't think it would be bad to put this on the buy list. Now, it's not going to see massive growth returns. You might see about 10% over the course of the next year with 2% dividends. So you might have a 12% return. But if you watch some of the other videos on this channel, you can see that there might be better opportunities out there. It's just what your risk tolerance is. If you want just a decent, consistent return, this is definitely a good stock to take a look at. So I want to thank you guys for watching. Please like if you enjoyed the video. Comment if you disagree with anything, or if there's any other stocks we should take a look at, and subscribe so you can stay up to date on everything. And I'll catch you next time.